Welcome to this Cinematic Explainer. Today, we're stepping into the markets with a premium, data-driven analysis of the GoldMining Elite Multi-Major MT5 account, specifically account 37311764. We're cutting through the usual noise and hype you see in the financial space to conduct a calm, intelligent, and highly transparent audit of this live trading signal. As the weekly report notes, this week, volatility continued building across major currency markets as USDJPY extended its bullish momentum following renewed US dollar strength and shifting interest rate expectations. But here's the thing. Despite those shifting conditions, the GoldMining Elite strategy didn't flinch. It didn't chase aggressive directional risk. Instead, it stayed laser-focused on diversified basket exposure and controlled recovery behavior. All right, here is our agenda for today. We're going to cover the weekly performance overview, get a lifetime progression update, look at navigating macro volatility and trades, dive into equity and drawdown management, show you how to access the live signal, and finally wrap up with a look at long-term consistency over hype. Let's jump right into Section 1, our weekly performance overview. Looking at the raw MetaTrader 5 data, there is an absolutely crucial piece of context you need right out of the gate. This is a live cent account. All the balances, profits, and equity figures you're seeing, they are denominated in cents. So we are looking at real fractional risk management. We had a weekly gross profit of roughly 47 cents and a gross loss of 17 cents, which brings us to a net profit of around 29 cents. For the week, our profit factor stood at an incredibly solid 2.72 alongside a recovery factor of 1.55. So what does that actually mean for the bottom line? Well, it translates to a realistic weekly gain of around 0.69%. Listen, in this documentary and analytical space, we aren't hunting for those 1,000% overnight returns because, let's face it, those usually just equal blown accounts. A 0.69% weekly gain is a continued, stable basket progression. It's realistic and it's methodical. You can see this clearly on the chart here. That green growth line steadily climbs throughout the week, while the red drawdown curve stays visibly low for pretty much the whole period. The strategy just maintained this incredible stability, smoothly absorbing broader Forex volatility without exposing the account balance to any severe, abrupt shocks. Moving right along to Section 2, let's look at the lifetime progression update. Zooming out, here's the lifetime MT5 report. Again, keeping in mind that this is a live cent account, we're looking at a total net profit of around 1,823 cents, bringing the total balance to approximately 4,262 cents. But the metrics that truly define the strategy's longevity are its risk management stats. A historical maximum drawdown strictly contained at 18.49% and a massive lifetime recovery factor of 9.66. All of this methodical compounding has resulted in a total lifetime account growth of 74.08%. How? By prioritizing a lifetime profit factor of 2.02. Literally, for every cent risked and lost over the account's life, the system has historically made double that amount back. It's all about mathematics and probability here, not unrealistic promises. The lifetime trajectory really tells the whole story. You see that consistent, gradual upward growth. And yeah, sure, there are periodic red spikes. Those are your drawdown periods. But notice how that green line just keeps recovering and pushing to new highs every single time. That gradual progression remains fully intact, even through all the global market shocks we've seen over the months. Which brings us to Section 3, navigating macro volatility and trades. Because the financial markets definitely do not exist in a vacuum, right? This week's trading environment was heavily shaped by macroeconomic headwinds. We saw shifting Federal Reserve expectations, which immediately impacted Treasury yields and drove broad US dollar strength. Add in the Bank of Japan's positioning and some shifting safe haven flows, and you've got a highly complex environment across the major pairs. But here is where it gets interesting. Look at how the strategy utilized diversification to handle those exact headwinds. On the left, USDJPY is showing massive bullish momentum, which is heavily influenced by that USD strength and BOJ policy. But on the right, EURUSD is facing severe bearish pressure. By trading a basket of 4 major pairs, the strategy dramatically reduced its dependency on any single pair. While the USDJPY trend required some careful basket management, those EURUSD sell positions swooped in and successfully captured the downside movement to balance the overall portfolio. And if we look at the detailed trade history, you can see exactly how this basket exposure was managed during the volatility. We're talking fractional lot sizes here, 0.05 on the USDJPY buys, zero point 0.1 on the EURUSD sells. This isn't a strategy taking massive, concentrated gambles. It systematically layers into the market, scaling exposure dynamically as the macro conditions evolve.
Okay, let's look at Section 4, Equity and Drawdown Management.
Here, the blue balance line remains super stable, stepping upward as profits are locked in. Meanwhile, that purple equity line represents your floating drawdown. Naturally, as those shifting Fed expectations cause some rapid market movements late in the week, you can see the equity line dip below the balance line. Guys, this is a completely normal mathematical reality of grid or basket-based trading. The strategy is literally designed to absorb this floating volatility while it waits for the technical recovery. We can actually quantify its ability to handle that floating drawdown by comparing recovery factors. The week definitely threw some challenges our way, yielding a 1.55 recovery factor as the market fluctuated. However, look at the lifetime recovery factor, a towering 9.76. This historical data absolutely confirms the strategy's deeply ingrained capacity to manage floating drawdown over time, weather the storm, and eventually close those baskets in profit. Next up, Section 5, Accessing the Live Signal. We want you to be able to verify all of this yourself. By scanning this QR code, you can bypass the simulation and instantly access the live public copy trading signal for GoldMining Elite MT5 account 3731164 directly on RoboForex. We'll leave this full screen for a moment so you can scan it and check every metric we've discussed today in real time. If you do decide to engage with this strategy, the steps are incredibly straightforward. First, scan the code to access the RoboForex signal. Second, definitely do your own due diligence. Review that long-term progression data directly on the platform. And third, this is absolutely crucial. If you decide to copy this strategy, you must use proportional mode in your copy trading settings. Because this is a cent account relying on fractional lot sizing, proportional mode ensures the risk scales correctly to your specific equity. Please don't forget that step. Finally, Section 6, Long-Term Consistency over Hype. This official thumbnail perfectly encapsulates the core identity of the GoldMining Elite signal. It trades four major pairs: EURUSD, USDJPY, USDCAD, and USDCHF. Now, the image highlights 72.11% total growth, but as we saw in the updated lifetime MT5 report just a few minutes ago, it's actually already progressed past 74%. The ultimate goal here is the long, steady road to 100,000 cents. We highly encourage you to monitor its consistency and its long-term progression, rather than chasing the short-term hype that ruins so many accounts. We've looked at the data, the macro environment, and the unvarnished reality of floating drawdown today. This strategy operates on a grounded philosophy that demands patience and discipline. Real accounts, real risk, real results. Scan the QR code, follow the journey, and stay focused on the data. Thanks for joining us for this explainer, and we'll see you next time.